Rush to buy gold among central banks as U.S. inflation outruns interest rates by most since 1975. Prices to buy gold headed on Friday for their third highest month-end ever and the highest weekly finish in London since early November, eve of the first successful COVID vaccine trials announcement, amid rumours of heavy central bank gold buying, a fresh rise in crude oil and other industrial input costs, plus the highest inflation on the U.S. Fed's preferred measure in nearly 3 decades. Losing $100 per ounce on Monday 9 November, the day of the Pfizer, BioNTech news, gold prices bottomed in March at $1,675. Today gold priced in US dollars rose to $1,896 ahead of the 3 p.m. LBMA benchmarking buy-sell auction in London, having risen through $1,900 earlier this week. New U.S. inflation data today said the cost of living in the world's largest economy, excluding volatile, fuel and food, rose almost 3.1% per year in April, the fastest annual rise in the core PCE index since July 1992. With the yield offered to buyers of 10-year U.S. Treasury debt ending last month at 1.65%, that long-term interest rates 1.4 percentage points below inflation, worse than any time since 1975. So-called base effects continue to drive annual inflation higher, however, because last April saw the core PCE index rise just 0.9% from 12 months before, near its slowest pace of the last 6 decades. Crude oil prices, having gone below zero in April 2020's COVID crash as producers struggled to find storage space amid the collapse in demand, today rose back to $67 per barrel of U.S. benchmark WTI, a record high when first reached in 2006. Shipping costs for China to Europe freight have meantime jumped to record highs, up 5-fold from this time last year, says the Drewry World Container Index. Back in the gold market, gold being bought inside the Bank of England's vaults, heart of the world's wholesale bullion market, has traded for as much as 50 cents above benchmark London prices, claims Bloomberg today, citing sources and traders, and suggesting this signals strong demand among official sector agencies, defying earlier analyst forecasts for moderate central bank gold demand in 2021. The Bank of England held over 5,640 tons of gold at end April according to data on its website, all but 310 tons, the UK's own gold reserves, held for foreign governments and central banks, as well as international bodies and also the commercial bank clearing members of the London Bullion Market Association. The Bank for International Settlements, the central bank's central bank, bought as much as 1 million ounce from various commercial banks at a premium of 30 to 40 cents recently, Bloomberg claims. With the BIS typically acting for central bank clients, analysts at Commerzbank this week said new data show the Bank of Thailand buying 43.5 tons of gold for its reserves in April, while Uzbekistan added over 8 tons and Kazakhstan over 4 tons. How London spot gold prices typically work is to be quoted for unallocated ounces, a credit position owed by the selling bank to the client, who can then pay a small premium for allocation into specific bars belonging to the buyer outright and therefore incurring storage fees.